Something interesting is happening in our housing market right now, but you won't see it in the usual statistics. Not in median price, not in inventory, not even in days on market. You only see it when you break the market apart by price. And when you do, a very unusual pattern appears. At first, everything looks normal. Homes between roughly $300,000 and $450,000 still have strong buyer demand. Plenty of showings, homes moving at a reasonable pace, but then something starts to happen. Right around $450,000, demand begins to soften. Buyers hesitate more, homes start sitting longer, and by the time you reach the $500,000 to $550,000 range, demand becomes the weakest anywhere in the market. Fewer buyers, more hesitation, more inventory building up. But then, surprisingly, something happens. Once you move above $600,000, demand actually begins to improve again. And by the time you reach the $700,000 range, buyer activity is noticeably stronger. So why would the middle of the market suddenly struggle while the higher end market keeps moving? The answer isn't price. It's the monthly payment. At today's mortgage rates, a typical home around $450,000 comes with a payment of roughly $2,500 a month when you include taxes and insurance. Move up to about $500,000 and that payment climbs to around $2,800 a month. And by the time you reach roughly $550,000, that payment crosses about $3,000 per month. For many buyers, that's a psychological threshold. Crossing from the mid-2000s range into the $3,000 range suddenly feels very different, even though the home price may only be $50,000 higher. So what we're seeing in the data isn't random. It's a payment threshold. Buyers are comfortable below it. They hesitate right at it, and once you move above it, a different type of buyer enters the market. You see buyers purchasing homes above $600,000 are often bringing larger down payments, selling higher priced homes themselves and have equity, or simply have more flexibility in their budgets. So while the middle of the market runs into the payment barrier, the higher end market keeps moving. So what does this mean for you? If you're a seller, pricing your home correctly around these thresholds matters more than ever. Small pricing decisions can move your home from strong demand into the weakest demand zone in the entire market. And if you're a buyer, understanding where demand slows can actually give you negotiating power. Because when demand dips, competition often does too. But the bigger takeaway from all of this is something most people miss. It's not really about the price of the home. It's about the payment. And once the monthly payment crosses certain thresholds, around $2,500 and especially $3,000 a month, buyer behavior changes dramatically. And when buyer behavior changes, the market changes with it. So if you want to understand what's really happening in this housing market, don't just watch the prices. Watch the payments, because that's where the real pressure in the market is forming.